Good morning. Welcome back to the Clubhouse Insider. I am Mark with Clubhouse Lending, here to give you the latest on mortgage rates and what you need to know this week. So rates are holding near 10-month lows after the Fed's quarter point rate cut earlier this month. We did see, rates come back a little bit since that cut. Everything was priced into the market. It was expected. Every time the Fed chair Jerome Powell gets behind the camera, gives a press conference, his outlook has so much to do with what the market's going to do to then project how things are going to shake out. So they're super data dependent. So the big thing to watch now and this week is Friday's jobs report, October 3rd. That's the next big date for mortgage rates. If job growth comes in strong, then rates could bounce higher, right? Up. If it's weak, then we might see more downward pressure that everybody's looking for from interest rates. But either way, the Fed has hinted at more cuts by the year end, but it really does all depend on the data. So Friday's a big, big day. So if you take a look here, just type in October 3rd, do a little research yourself to see kind of where a lot of this information comes from and who these experts are. But yeah, it's all the traders love expectations. So everything comes on expectations. And if we get a weak jobs report, that's what the overall market and bonds and everything else, that's what they're looking for to be able to see rates go the way we want. And so here you see the 10-year Treasury. So when the Fed cuts rates, again, for the millionth time, and we'll keep saying it forever, the Fed cuts the federal funds rate. Mortgage rates are most closely associated with this 10-year Treasury. Now, obviously, it's not one-to-one, right? Because mortgage rates aren't 4%, but the graph here and the ups and downs, that's kind of what follows mortgage rates. So this is just one day, but right now we're at 4%. We want this to be a 3 to really start seeing rates at 6% and lower for average conventionals. We were at 4.0, but you see since the Fed, we went the wrong direction a little bit. If you take a look here at mortgage rates, same thing, right? Been kind of consistent. This is basically a year chart, and you can see that we're basically where we were last year. So those 10-month lows we're holding there. We're not quite at lows for the year or the last 2 years, but we are creeping back down. August was great, and then boom, here post-Fed meeting, you can see this little rise. And then finally, the averages, sort of looking here, 6.3, right? Still pretty good. Anything under 6.5 is better than what it's been. But we're looking for a little bit more love. FHA, VA still holding strong. A lot of times you can still get into the 5s, especially if you get competitive offers because your credit score and things like that, or work with someone like us who has really competitive rates to offer. So with that said, this is where I can help you as a broker. I have access to wholesale lenders, dozens of them, with fewer restrictions than the bigger banks and bigger lenders. That means I can shop options. I can stretch your budget and your buying power just a little bit further. So whether it's timing a lock or structuring a deal around concessions, I can build a strategy for you and for your exact situation instead of forcing it into just one box that the big bank or the big lender might have. So that's this week's Clubhouse Insider. Keep an eye on that jobs report information that's going to come out Friday. And if you want to put a plan together, please reach out. I'll help you stay ahead of the market so there's no guessing. So we'll see you next week.